All right, let's dive into UiPath's latest earnings. This wasn't just another quarterly report. No, this was the quarter where the company went all in, placing a huge bet on something called Agentic AI. We're going to break down exactly what that means for the company and for investors. And really, you can boil their entire strategy down to this one quote from CEO Daniel Dines. Automation and agentic AI are stronger together. That's the big idea. It's not one or the other. It's both, working hand in hand. This is the key, the lens through which you have to look at everything else they talked about. Okay, but here's where things get interesting. This is the puzzle we've got to solve. On one hand, the earnings report was solid, and the stock popped over 5% after hours. The market liked what it heard, right? But then you zoom out, and you see the stock's been getting hammered, down over 18% in the last 3 months. So what gives? Is this a real turnaround or just a dead cat bounce? So to figure that out, here's how we're going to tackle it. First, we'll look at the beat and raise quarter itself. Then, we'll dig into the numbers. After that, we unpack the whole automation meets AI strategy. We'll put on our investor hat to see what the market's thinking, and we'll wrap it all up with our take, the next call. All right, let's jump right in. Section 1, a beat and raise quarter. Now, for anyone who follows earnings, you know this is the holy grail. It's the 1-2 punch Wall Street loves to see. You didn't just meet expectations, you crushed them. And not only that, you told everyone you're going to keep crushing them. It's a huge signal of confidence. And that is exactly what UiPath pulled off this quarter. They came out, beat the numbers on the key metrics, and then raised their guidance for the whole year. You know, given how the stock had been trending, this was a direct shot across the bow to all the doubters. They basically set the tone right away. We're back on track. Okay, so let's get into the nitty-gritty. Section 2, the story in numbers. Talk is cheap, right? Let's look at the actual data, the hard numbers that prove they weren't just blowing smoke. We're going to do a quick fire round of the key metrics. First up, let's talk profit. Earnings per share, analysts were expecting 8 cents. UiPath delivered 15 cents. That's not just a beat, that is an absolute blowout. We're talking nearly double what Wall Street was modeling. A huge, huge surprise on the bottom line. And what about the top line, the sales? Just as strong. They brought in about $362 million when the street was looking for under $348 million. So that's a nice 4% beat. And it's also up a very healthy 14% from last year. So bottom line, top line, checks across the board. Now, for a company like UiPath, this next number is maybe the most important one of all, annual recurring revenue, or ARR. Think of it as their predictable subscription-based income. It's the lifeblood. And they grew that to over $1.7 billion. That's up 11% year over year. Steady, predictable growth, that's music to an investor's ears. And this is the other half of that 1-2 punch I mentioned, the raise. Management stepped up and boosted their forecast for the entire year. They raised their targets for revenue, for that all-important ARR metric, and for operating income. This is management basically saying, yeah, Q2 was great, and we're just getting started. Okay, so we've seen the numbers. The what is clearly strong. Now let's get to the why. Section 3, strategy, automation meets AI. What's the big idea that's supposed to keep these numbers growing? Well, it's all about their massive bet on what they're calling an agentic future. So what on earth is agentic AI? Let's just pause and define that, because it's super important. Imagine you have a digital assistant, but instead of just answering a question, it can actually do things for you. It can see what's on the screen, make decisions, plan a series of steps, and then execute a complex task, all on its own, with you just checking in. It's like going from a simple calculator to a full-blown autonomous intern. A huge leap. So how are they actually building this? Well, you can think of it as 3 main ingredients. First, they have coded agents, which are tools for developers to build these little digital workers. Second, a data fabric, which is a fancy way of saying they're creating a system to feed these agents all the information and context they need to be smart. And third, IXP, which helps the agents read things like PDFs and invoices, unlocking all that messy, unstructured data and turning it into useful information.
And look, this isn't just some PowerPoint strategy. It's actually landing with real customers. Voya Financial is already using this for over 40 different tasks in their claims department. Some giant tech company just signed a $1 million plus deal to use it for a massive SAP project. A healthcare provider is already seeing a 60% reduction in manual work in their pilots. Even the US Navy is on board. This is real stuff, delivering real value.
And they're not trying to do it all alone, which is smart. They're using partners as a massive force multiplier. I mean, you've got Deloitte, a huge global consultant, literally launching a new business built on UiPath's tech. You have Microsoft doubling down on them as a preferred partner, a new deal with HCLTech to push this out to even more big companies. They're building a whole army to sell this vision. Which brings us to the million-dollar question, doesn't it? Let's get into section 4, the investor's view. We've just laid out a pretty great story. Good numbers, a compelling strategy. So let's circle right back to that chart we saw at the beginning. What is holding this stock back? So yeah, let's just put the question out there. Why is the market so cautious? You know, when it comes right down to it, it boils down to that old Wall Street saying, show me the money. Or maybe in this case, it's just, prove it. See, one great quarter is nice, but it doesn't make a trend. Here's the checklist investors are holding. They need to see that ARR growth not just stay steady, but actually speed up again. They need to see the company string together a few of these good quarters in a row. They want proof that customers are actually buying these new agentic tools, not just playing with them. And they especially want to see the biggest customers spending more and more. It's a show me story, plain and simple. Okay, so that sets the stage for our final section, the next call. Now, this is where we put on our analyst hat. This is our take on where things go from here. Think of it as what we'd say if we were pitching this stock in an investment meeting. It's our outrageous but totally plausible scenario. So here's our call, market perform, which is basically analyst speak for neutral. Look, the long-term story, it's fantastic. This idea of becoming the main brain that coordinates all these AI agents in a big company, that's a huge opportunity. But in the here and now, you've got a shaky economy and, like we just said, a big need for them to prove they can execute consistently. So for now, we're on the sidelines until we see that ARR growth really start to pick up steam again. The story's A+, the execution is still a question mark. And here's our prediction for what happens next. The next earnings report will probably be fine. Decent. We'll see stable customer retention, some modest ARR growth. But the stock? We think it's going to be stuck in the mud, basically trading sideways. It'll likely stay that way until investors can actually see the revenue from all these new agentic products on the income statement, which probably won't be in a meaningful way until fiscal 27. And of course, I have to say it, this is not financial advice. So we'll leave you with the one question that really gets to the heart of the debate on UiPath. Is what they're building here a truly durable, long-term platform for the age of AI, something that will compound value for years? Or are they just jumping on the latest AI buzzword, chasing the hype? The story says one thing, the stock chart says another, and I guess the next few quarters are going to tell us who's right.